Welcome to the Swing Trading with Cycles channel. We're going to do an update on copper today. It's February 8th, 2023. And if we have time, we'll also look at FCX, which is one of the proxies people use for trading copper, kind of like a big copper miner, although it does have exposure to other things. The last video for copper was, at this point, maybe a couple of months ago even, maybe like late November. And we pointed out, I'll get rid of the drawings. So this is your yearly chart, your annual, every candle is 1 year of price action. And we pointed out that 2022, was a bearish outside candle, meaning, well, if I do that, I'll bring the lines back. Like you can see, we made a high above so you're always comparing a candle to the previous candle. That's how, like, that makes sense, right? Because you're looking at how is price changing in time as it moves forward? Like, how is it changing as it moves forward in time, right? And so this candle actually, let's start with the 2021 candle compared to the 2020 candle. That's making a higher high, very clear, and also a higher low, right? The lowest point of this candle was here, highest point was here. That high is higher than this, and that low is obviously way higher than this. So higher high and a higher low, awesome. And then this candle makes a higher high. That's what this wick is. That means at one point this was a green candle. Price was all the way up here. It was a big green candle making a higher high above here. And then it just stalled out, started to form this wick. And then eventually it went below the opening price. That's how a candle goes red to green, right? Like, that's important, that the opening price is a pivot point on which the candle forms. And so once it goes below that opening price, it goes red. If it can go back above it, it goes green. So this started green, but it went red, and then it went so red that it actually made a lower low. So it makes a higher high and a higher low. So that is massive volatility. And a bearish outside candle usually leads to bearish follow through. The catch here, though, is that you then have this this lower wick. So this becomes a big doji candle, which is more indecisive than anything. Because think about that. This upside move failed. It didn't get followed through. It failed massively, so much so that the candle went from green to red. But then this red move where it's like, oh my God, are we going to all-time low? Well, no, like, are we going to break this pivot here? And it's like, no, maybe we're not yet. And then we rally all the way back up. And we'll look at the lower time frames to see that rally that caused this, obviously. And now, as we talked about in that video, we're just, and take a look at the pinned comment. We'll have the previous videos there and a bunch of other content around cycles, other important price action concepts. This is a big inside candle now, right? This whole range from last year, a huge range, $5, 5.0395 at the high, and 3.1315 at the bottom, right? So like, that's a range of about $2 on something that's trading at $4 right now. That's a huge difference, like percentage wise. And so this is kind of a nothing burger right now. It's funny that people are like, oh my God, copper is rallying. Obviously, it matters your time frame. This is your yearly chart. So let's zoom in. How has it looked in the last few months since we reviewed it? So most important thing, so again, I think the update was probably either in like late November or early December. Look at this massive higher high we got since then. That's the rally everyone's been talking about. That's what's gotten people's attention. That makes sense. So that's your January candle. And you can see February is just a big inside candle, just like the yearly candle for 2023 so far, which is really just a combination of these two candles right now, right? Because it's still got a lot of candle to form. It's just an inside candle. And I hope you can see that visually. These 12 candles are your 2022 candle. So if you combine them into one, that was that chart that we were looking at before. You want to start looking at the price action in that way, like understanding how the different time frames are creating patterns and what that means in terms of probabilities, right? And so while it was just an inside candle on the yearly, like these two candles, notice where it's coming from, though. It's coming from this move up, right? So that favors more upside, unless, I mean, at this point, your real big level that you want to watch for is the low from last month. So that is 3.7085. And we're not very close to that at this point. We're basically in the middle of this range. but we're probably undergoing a cycle decline on a lower time frame that we're going to look at. If we think about this long-term cycle, this thing rallied for 24 months. You can say from here to here, right? This part of the rally obviously petered out a little bit, became more of a bull flag, but after this month, we then really collapsed, right? We made a swing high. This month became a swing high. Again, there's an entire video on swing highs. That's how a downtrend begins. So once we drop below 4.685, let's put our line there, right? Boom. So we made that swing high in April, and then we got bearish follow through for several months. But then we bottomed in July, and notice that price actually stayed inside the range of the July candle, right? You can see that there. I'll get rid of this line. Actually stayed inside the range of that July candle for 1, 2, 3, 4 months. Broke out in November, poked its head up, and then pulled back pretty massively. Inside candle in December, not a whole lot happened. And then boom, now we're getting another inside candle in February. Still quite a bit of trading to go in February, so there's time for this thing to kind of change. But again, we look at the lower time frames to tell us what might be happening there. So let's zoom into the weekly. So this weekly cycle has been really strange in that it's rallied for a really long time, and we'll go, and then when we zoom in on the daily, we'll see how that is. You can see this, like you had this kind of cycle that was really left translated. So we had this feeble rally for 12 weeks, right? From this swing low to this swing high. And then we made a swing high, although this was a bullish, I mean, this is a pretty bullish looking candle. This in real time looks like it's going to be a false breakdown. But then we just have 3 months of consolidation and these upper wicks, which are usually pretty ominous. Price just pulling back, not be like finding a lot of selling pressure and or no buying pressure. And then we had the collapse. I mean, this is almost, if you looked in a textbook, this would be, kind of perfect for a downtrend in a sense. Like, look at that. You went low. Then you had this nice little rally that lasted basically at 3 months, right? Pretty convincing in real time. And then wham. Right? So now it's like, oh, wait, that's a higher low. That's a higher high. That's a higher low. You have this little chop zone at this point. That's a higher high, and now we're likely printing a higher low. And then we resume up. The important thing here, though, is this weekly cycle was pretty squirrely in its shape. I mean, look at this. It looked like it was going to fail right here. I mean, this is a big swing high. But the catch is, this happened, I'll just make sure you can see that, and we'll get rid of, like this line here, right? So that was a big swing high that occurred, but that happened on week 1, 2, 3, 4, 5, 6. So that's important in the sense that if it happens early enough in a rally, it's possible that it'll sort of recover from it. Whereas this swing high that's happened on week 27, it's like, well, you would imagine this is going to cause a bigger decline because we've been rallying for 27 weeks versus at this point we had only been rallying for 6 weeks. Now this looked really bad in real time. I mean, look at how it just crawled along the bottom for several weeks, a couple months really. And then, I mean, this is like your October period. And then we just kind of rally up. Now, this swing high that we just formed, and just to be clear, this swing high is active below, this is a weekly swing high, active below 4.1105. That is actually, it's actually possible that becomes something like this swing high, right? Like we had the move lower, and now we've went on to make a higher high. Because notice, none of these managed to close below the 10-week moving. I mean, you had this whole period where we closed below the 10-week moving average for weeks. So you could quibble and say this is actually a cycle low and this is our new cycle. That's fine. The point is, at some point, we're going to close below the 10-week moving average. Just we're going to have a deeper pullback, but it's very likely that it's going to hold a higher low. Like if we think about what has the rally been, and we can kind of think about just a ballpark. So we've rallied so that's, about, and nice percentage wise, 1.2. So wouldn't be crazy for us to come down like 60, right? They just retrace 50% of the move, easy. That gets you down to around 3.75. So, and that's about 14% from peak to trough, but we've already dropped, like how far down are we already? we're already 8% down. But that gives you a sense. We could easily we could easily have a full 14% retrace, let's say, maybe even deeper. Like, what was this retrace? Just to give a sense. So that was 10%, right? This move, and again, this was followed by some pretty bearish, just kind of crawling along the bottom, which was ugly. Wow, that was exactly 14%. How interesting. So again, we're at 8% here, so we probably get down to that 14% level, even a little lower. And I'd say that's more of a structural thing. Like, notice, it would land us, like, you can see that line here, the 3.75. Makes sense that price would retest this zone where we chopped around for quite a bit. And if we think about the daily, this is what's happened. We had this period of malaise. Well, you had really this drastic decline and then this kind of feeble rally that just chopped around here. And then look at this, just went vertical. But now it's I mean, look at, it's just kind of went, this is a rounding top on the daily chart. Now, what we're looking for here is a swing low on the daily, which will tell us, because that's the interesting thing. If we're already on week 30, we're like pretty deep in the weekly. So that's week 28, 29, yeah, week 30. It doesn't mean it has to be a 30-week cycle, but that generally tends to be about the longer cycle for copper. I mean, you can see these numbers here. So it'll be interesting to see. It's entirely possible that we actually keep the, like, we just kiss the 10-week moving average. It's possible that that's all we get, but the signal is going to be this bottoming pattern on the daily chart. And we tried to make a swing low by closing above that candle, and we actually did. So this candle here, nope, that's not what I meant to do. This candle here has a high at 4.074, and this thing closed at 4.08. So it made it, but today we got this pullback. Although notice this looks just like that yearly candle. It's a big doji, but it's red, so not awesome. And it also means, tactically speaking, we're gonna open inside as an inside candle tomorrow. So something like that, and probably at the lower end of the range based on where we're likely to close at this point. So we're going to be looking for a low there, and that's going to probably tell us we've got a low on the weekly chart and a chance to go long. So so speaking of going long, let's look at FCX, which is usually the best representation of this. I'll tell you though, it doesn't move in exactly the same way that copper does, in the same way that gold miners move gold miners move much closer to the way gold does versus FCX moving with copper. So that's important to note. So this rally, for thinking about the same context, so that's a rally of 24 months. Now notice copper actually rallied for 26 months. So that just tells you something right there, that the rallies weren't even sort of synced up. So this thing peaked in March, which is also exactly when gold peaked, which is not at all surprising because FCX, this is Freeport-McMoRan, by the way, does have exposure to gold as well. Wait, that's also March. Oh, so they actually peaked around on the same month, but this rally low started from March 2020, whereas, let's see, did FCX make a lower low? That doesn't make sense. Wait a second. I think I might have that mislabeled. That's 2020. That's March. Okay, yeah. So they both actually synced up. So it's the same. It's a rally off the March low, and it's a 24-month rally for both. Let's go back to FCX. So very, very likely that FCX bottomed here in July. So it bottomed ahead of gold. Again, it's more associated with copper than gold, so that makes sense. Whereas gold has bottomed in September so far. I mean, we'll see if they hold the bottom. And so far, look at the 2 months that followed that bottom. Pretty ugly, hard to trade those. But then we get, I mean, this is a nice move, right? Like, this is a higher low. This is potentially setting up as a higher low. And like this, you see, like this candle makes a slight higher high, but it doesn't really go anywhere near making a lower low. It stays at the upper end of the range. And that's what we're seeing with this one so far. So let's look at the weekly chart. It's the same kind of idea, it looks. So, right, this is the same shape as the copper chart. We had this big move down, but it refused to make a lower low. So you can kind of quibble, was this your cycle low? Was this a cycle low? I think if you think about it from like this, It's been a 18-week rally. But notice, we haven't closed below the 10-week moving average. And there's nothing special about the 10-week moving average. It's just a short-term moving average for the weekly chart. And at some point, price is going to have a deeper pullback. And that is a good proxy for it. But what that really means is it's going to make lower lows and lower highs for a period of a few weeks, maybe many weeks. It all depends. And you can see we actually have a swing high on the board here, but we're back above the level. So we made a high in week of January 23rd. And now if we're below 42.70, that swing high is back in play. And you can see we close here at 43. So FCX is showing more strength than copper itself. And if we think about FCX in the context of the daily, wow, look at this bull flag, which may have made a low on this day here. So that's the same day that copper potentially has a low. So you can see it's the same formation, except in the case of FCX, we're closer to preserving the swing high, although we're not quite there, or excuse me, the swing low. So we got to stay above 43.10 to preserve the daily swing high. So that's going to be really your level to watch. But this definitely looks on a path back to all-time highs, and that's about $52 for FCX. If we look at the yearly chart, it's really the same exact picture as copper, actually. Bearish outside candle last year, but look at that small body, right? What that's telling you is, and wow, what a volatile year. It started green because it made this higher high, and then it obviously went red, but it got close to going green, right? If it kept moving a little bit more, it would have actually went green. That's what all this upper wick is. And so once we get above 51.99, right? So actually your all-time high is at 63.62. So that is really exciting. Wow, this is an exciting pattern. We'll definitely keep updates on this channel. But the way to think about this, and this is a yearly chart, so it's a big pattern, big signal. Once we can break above the high from last year, 51.99, right? That gives us a move to 63.37, right? Not necessarily in a straight line, obviously, but that's the potential setup, right? Like once we can poke our head, and I imagine getting through there may be a little bit difficult, and so it's really going to be a question of when it's able to blast through, maybe even retest from the bottom. Then you have this move to 63, and then new all-time highs potentially. Sort of the sky's the limit. Let's look at the market cap really quickly, and then we'll kind of close it out just as a FYI. So market cap 61 billion. So not tiny. 1.3%, 1.37% dividend yield as well. So that's nice. So that's the story on copper. We're finally getting a little bit more clarity. Again, it was a weird sort of rally up because we had that early potential failure, but it did manage to hold together so far and has been rallying essentially for 27 weeks. So we'll continue to watch that. And again, this is a big signal on this yearly chart for FCX. And I'll definitely be giving updates on Twitter as well, just more in real time. This will be one to watch. I think the options on this one are usually pretty liquid as well. So we'll leave it at that. Thanks for watching.